Hello traders, good morning. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency, and we start with the big news. Euro dollar breaking through that 120 round level resistance. Of course, 120, a very strong psychological level. We certainly saw a response as expected with the bearish candle, but it was just an initial bounce, a 80 pip bounce, and after that the bulls retook control and pushed us higher. And they did that with a lot of momentum, because look at this candle. This is a sizable 150 pip candle plus minus from a high to low. So that is a lot of movement in one day for the euro dollar, specifically if you look at the average range of these daily candles. This is probably the biggest candle, or maybe the second one, but I think the biggest, to be honest. So that says a lot. Not only that, but it also clearly broke above the resistance of 120. And, of course, it closed near the high, indicating that the bulls not only broke through 120, but they kept control at the end of the day. So that's, I think, a very significant and strong bullish signal. And I think that makes the breakout very likely, and an uptrend continuation also very likely. So from my point of view, as I mentioned before already, this looks like an ABC, and a 5-wave. So an ABC already was completed there. The question was there going to be a complex correction, or was the wave 4 finished, right? Was there going to be an extra WXY added to that layer, or was it going to just be a simple ABC for wave 4, and up we go for a wave 5? So now a wave 5 seems very likely. We're probably in a wave 1, 2, 3. Although price does need to move higher to confirm that, because it is still only in between the -2 and -61 per day target. So really, for wave 5 to be confirmed, it needs to break above at least the -61 per day target. So that is still a major level to break, but with such a daily candle, it does seem more and more likely. Let's zoom out a little bit here. This is a big development at this moment. So let's take a look at this weekly chart. And what we see basically here is of course, this upside retracing this very long, lengthy bearish swing. As you remember, we were in this for ages, this downside, and years really, and finally we're in this uptrend here. And the next target could be the 78.6 fib, but I think it can go even up to the 88.6 fib. I think that's the main target for the moment. If we put a fib from here to here on the wave 3, if this is a 1, 2, 3, 4, 5, then the -272 target is a logical level to think about, and there's a nice confluence with the 88.6 fib there at 123.50 plus minus, right? Anywhere between 123.36 and 123.87, as you can see. So 123.50 seems to be plus minus the main target zone on this weekly chart for this wave 5. So yeah, let's see. It could go higher, maybe. It depends on the bigger outlook. I don't spend too much time on this monthly chart, as you know, but if we do that for a second, then the big question, of course, is the direction, the long-term direction of this euro dollar, because we see momentum here, we see decent momentum here, and even stronger momentum here. So is this bullish or bearish in the long run, right? Was this is this a 1 or A, and this is a B, and up we go for a C? Then we would expect price to go much further, for instance. And we expect price in that case maybe to go to 131 eventually, right? Maybe not in 2021 necessarily, certainly not this year, but eventually, right? So that's if this is an ABC pattern. Or are we looking at some type of triangle pattern, right? A, B, C, D, E. That could also be a very realistic scenario. So that's why if price respects this top, then it could be a triangle pattern. If it breaks that top, then it isn't, of course. It's not a contracting triangle in any case. And then it could be an ABC zigzag, as I mentioned. If it respects this top and the 88.6 fib, it could be that triangle pattern. And it could be A, B, C, D, E, and then break to the downside, or A, B, C, D, E, and break to the upside. Wait, hang on. A, B, C, D, E, and then it's down. And if it is A, B, C, D, E, then it could break even up, of course, as well, like that. So let's see. Alternatively, so if it's a triangle pattern, let's see which, if it could break both ways. If it's a zigzag, it can go up. It could also be a zigzag down because of the fact that this could be ABC. This is A or 1. This is 2 or B, and then down 3 or C. So I'm open to, at this moment, both directions. I don't think it's really, from a technical point of view, it's 50-50. One could say that the upside maybe has a slight edge just because, technically speaking, price is breaking through this bearish channel, right? And it has a 3 touch, and this is a significant break. This was a break, pullback, retest, and bounce, and now it's breaking through the long-term moving averages. So that's a good argument, I think, for upside. Maybe could put it in the 60-40 zone. There's also a respect of this support trend line coming in here that was respected, and price is still above that. And of course, there was always pretty strong momentum in the historical past as well, and this quite choppy and corrective relatively. So I think those are decent arguments for upside, but it depends really on the break. More relevant maybe for current trading though, let's zoom into 4-hour chart, is this push up. Maybe a 1-hour chart is needed. We're looking now, the main break, or from, in my opinion, the main kind of confirmation of a breakout was the break above this trend line, because otherwise it could have been an ABCDE, or it could have been even an ABC zigzag. So that was this break pullback continuation here, which you can see on a 5-minute chart a little bit better. Here, as you can see, break pullback continuation was the main criteria for me for that upside, and after that it was a nice 80 pips push up. And so therefore looking like a 1, 2, 3, 4. So let's put that fib on wave 3. And respecting these fibs, let's see if it respects these fibs. If it does, if it stays above the 50 fib, very likely to be wave 4. And I'm expecting a push up for wave 5 to go to 121.15, 121.20. And that's where I would expect a bigger bull flag to emerge, because then it's hitting that minus 61.8 target zone. And I would like to see a flag there. And if it does make a flag and the 4-hour EMAs, 21 EMAs move up, and that breaks that flag, then we should see an uptrend continuation. If there's any break below the 21 EMA, that would seriously, put a dent in the upside, and we'll have to be careful, because in that case, it might still be that ABC that reaches the minus 61.8 target. So I think a slight upside, 50 pips there maybe left, and before we should see a bigger bull flag. Of course, if it starts breaking above 121.15, 121.20, well then this is really, really strong, right? And in that case, there could be an extension higher, maybe to 121.60.50 for the moment, but that's probably, in my view, only tradable on lower time frames, small scalps on the 5-minute chart to trade with the trend. But I assume that at one point some kind of retracement is likely in these target zones eventually. The question is what type of retracement. If it's a bull flag, I'm expecting more upside. At this moment, I do expect that. I do expect more upside. 21 EMA zone on the 4-hour chart is key. Price will need to stay above that to confirm and stay in this uptrend, in my view. All right, that was a long one, I guess, on the euro dollar this time. Moving on to the pound USD. It moved up, but less bullish, and that isn't surprising. It had a more bearish character, and but yeah, it is testing this triple top too. It's a difficult zone, 135. Really a lot of resistance, a lot of sellers there in the past, and struggling at that level. As you can see, didn't get the break like the euro dollar, and that's not necessarily what we expected. 88.6 fib holding, although price was trying to push through it, I should say. Sorry, look, as you can see, but failed breakout in a way. Or is this a pullback? I wouldn't hold my breath on that pullback. It's, I think, a risky spot for the pound in my view, but of course you never know. It might move higher, but looks really very much like a rising wedge to me. And although, of course, there could still be one more push within that rising wedge, it's always possible. I personally wouldn't be jumping after that trade right at the 88.6 fib and the previous top and triple top and such a strong resistance zone. So looks like it's struggling here. Looks like an ABC pattern is completed, and if anything, I would expect a reversal to kick in eventually. I would, for a reversal to play out, I would need to see a break probably below these fractals here at 133, and then a bear flag on the hourly chart, and then a drop down to 132.25, 131.75. Like that. I should use red actually. 1 hour flag, very important after the break. Of course, if, as I said, it could still make a rally. It did break, and it was very choppy in this push, in this part. It already made a rising wedge, then broke that rising wedge, 3-wave down here, and then a lot of consolidation with a lot of swings up and down. As you can see, look at that. Here, let's zoom into that. Up, down, up, down, up, down, up. So following that logic and up here again, just to stay in this range, I mean, wouldn't be necessarily surprising. Maybe on a 5-minute chart, if there's some head and shoulders pattern like that, for instance, for a move up. But I don't expect it to go too far. I think it will hit resistance maybe here already. Or that's something you got to be aware of, that it just can move up a little bit and then find resistance and move down again and then maybe up again. It looks choppy. I think it will stay choppy. It doesn't look that interesting to trade. If it breaks above 134, maybe a small push up to 134.50 within that rising wedge. If it breaks 133, it could be the end of the rising wedge. But I am not jumping for joy to trade this, and I'll be very careful if I do. That's my view. By the way, if you like these videos and our webinars in general and our website maybe as well, or if you don't, of course, in any case, feel free to reach out, write your review about us on trustpilot.com with a review. We only have 10 reviews, so that's why I'm asking here for more reviews, just to get more quantity on this website about us. In any case, thank you for watching and hope it helps you. And of course, see you soon in some live webinars. Cheers. Bye-bye.